Welcome to the Just Word Podcast. I'm Pat Bolland. The Just Word Podcast is brought to you by Justwealth, investing the way it should be, just for you. Harrison, welcome to the podcast. A pleasure to have you here. Talk to me about what
Thanks.
virtual accounting is and what it is that you do, and you've been doing it for a few years.
Yeah, I have. So it's a remote accounting service. So I think traditionally there's been accounting offices. Everyone sees them when they drive around. They're usually above some other building, kind of nondescript. But I think eventually people realize that you don't really need to go into an accounting office to get the services, because everything is online. All of the software, all the communication you can easily do online. So it just made sense that eventually a business like accounting would move mostly online. And as the pandemic hit, obviously all of the accounting services had to do a similar thing themselves. So the whole industry in general is kind of moving in that direction, where if you want to get accounting services, you can now find any accountant online and access their services. So there's lots of options out there.
Okay, then what is the difference between what you offer as an accountant and if I were to do it on Quicken or QuickBooks or TurboTax, or there's all kinds of other more commercially oriented accounting programs out there?
Well, we use the same, a lot of the same software. So like QuickBooks is my main choice for bookkeeping software.
Mm.
But what I've found is that a lot of people who are preparing their own bookkeeping, they might think that they're doing it correctly, but it ends up being such a mess that they'll end up having to spend a lot of money to try and get it fixed afterwards to begin with. So in general, I do recommend having a bookkeeper to help with that kind of stuff. But my service in general, we offer bookkeeping services as part of it. But the main thing where we're helping businesses, we're helping them to figure out what they're doing going forwards. So we're helping with forecasting how much money you're going to have available in the future and what your revenues and expenses are going to be, and trying to determine when you potentially need to raise money and get investment for a lot of these companies. And I think that's a really difficult thing for a lot of people, and it helps to be able to understand where they're going.
Yeah, I saw that on your website. That's the fancy word for that is financial modeling. But I guess a lot of the assumptions are important when you're building the modeling overall. What are the key assumptions if you're looking at just a general business?
Oh, well, yeah, there's lots of different assumptions that go into a model, of course. And if you're first starting out a business, like say it's a startup and you don't really have any money coming in yet,
Mm.
everything is assumptions,
Yeah,
because
it is.
you don't know. And a lot of it feels like it's kind of made up at the beginning to some people. But as the most important part is you have a basic understanding of what you would call like the unit economics of the product or service that you're offering. So how much you're going to charge, how many clients you're going to have, and what the costs are that are going to go into that product or service or whatever it is you're offering. And once you can figure that out, then that can determine your whole business, how you're going to go about your whole business. Because if you're a newer business and you don't know how much to charge, you don't know how much it's going to end up costing to provide that service, well, if you try to actually figure it out and look forwards, you might realize that, oh, well, I can't actually offer this service at this price. It's not going to work. So I'm going to have to try and figure out a different way to do my business. So I think that's like the most important part of, those are the most important assumptions to get right when you're starting or running a business.
Okay, that's fascinating because you say they're making, I don't know, beeswax candles or something like that, and you decide to charge $10 and they're not selling, and you walk it down to $8. I mean, how often do you have to adjust your assumptions? Is it an annual thing? Is it a quarterly thing? In your experience, how often?
Yeah, well, you want to, especially the early stages, adjust as often as possible, but most people are not going to have the time to do it every month. So so that's kind of out of the question for most people. But for any newer business, things are going to change so quickly that you want to try and do it at least once every quarter, so every 3 months or so. And that
Oh,
way you can look at what's happened in the last 3 months and you can compare it with what you thought was going to happen. And then you can learn from how you projected versus what actually happened. And in that way, you get to understand your business better every 3 months, and you get a better idea of how to run the business as well as the projections.
now you yourself are changing. Your business started out in Ottawa. You've moved to Victoria for lots of different reasons,
Mhm.
as I understand it. But you're also
Yep.
moving into a different area called software as a service. In layman's terms, what is that?
Yeah. So I think most people understand the traditional software business. So how it used to work is a company would start up and they would get a bunch of programmers. They would spend a lot of money creating some kind of software product. And then they would go out there and they would try and market it to people and sell someone a subscription or like a CD back in the day. And they would just be able to use that software for however long they wanted. But eventually some companies realized that it actually makes way more sense, instead of just doing this one release, to continually update and try and figure out how to improve the software, because people don't actually know how the customer is going to use the software until they see them start using it. So what a lot of companies do now is they offer software as a service. So most of this is online services. So you can log in, you can use it every month as long as you're paying your monthly fees. And the business can keep, or the software company can keep improving the product, figuring out what parts are being used, what aren't being used, take some away, add some more, and keep building and improving the product over time. And these companies who switch to this model, and now it's like almost every software company follows this model because it's worked so well. What they've realized is that they can actually get a lot more money from people. And I don't mean that in a bad way, but it's just that it's a lot easier to tell someone you have to pay $100 each month and you'll be able to use the software, rather than saying you have to pay like 2,000 right now just to have access to be able to use this
It's
thing.
almost
You
like
don't
an
even,
ongoing payment plan then.
yeah, essentially it's pretty much just a payment plan, but it changes the way that the companies operate as well. That was kind of the key switch towards software as a service. Most of the companies operate differently now.
Okay, so then why do you see this as a niche in the accounting business, for instance, and an area that
mm,
you want to move into?
well, yeah, one thing that happens with a lot of accounting firms or consulting companies of any kind in general is that it's really hard to turn down business. You know someone who knows a friend who needs help with, if you're an accounting business, there's someone who needs help with like property management accounting, who also, and another one that needs help with restaurant accounting. And you can never really get that good at one specific part of it because you're trying to spread yourself way too thin. So just in general, I'd say for most like accounting, consulting, any kind of company like that, it helps so much to focus on a niche and try to turn down business. But software as a service, I think a lot of people underestimate how big of a niche it is. So yeah, when I tell people, they're often like, oh, that seems like a very focused place to go. But it's a huge industry. Like all of the biggest companies out there, if you look at like Amazon, you've got Apple has software as a service now, like Microsoft, Oracle, all of the biggest companies, they're all offering software as a service. So you can tell that it's a huge industry where all of these new companies are trying to find their way and create a new product that they can offer. So they need the help. But yeah, it was a bit long, but that's the main reason why software as a service is such an important niche to help.
Okay, then against that background, and given that it's presumably quite scalable as a result, how do you roll it out? How do you get people to find out about your product?
Mm. Yeah, the thing about accounting is a lot of times that you're just getting new clients from referrals from other clients, because people tell you that their accountant's good, so he can help you out. But then in order to help to reach out to a broader network, it's a lot harder. So you have to try and do things like podcasts or videos and marketing like that that would help bring in a potential broader base of clients. So on the marketing side, that's one way to help bring in new clients, I suppose.
Yeah, and the rollout side of things. And then who is your target audience? When I say business, is it small business and 5 to 25 employees, or are you looking at the 500 plus, if you will, size
Mm.
corporation?
Well, so the way it usually works is if you're a software as a service startup, you have to raise rounds of funding to try and get the money to allow you to run your business, because often they have to spend a lot of money to try and bring in new customers and create the product, but they're actually only receiving a small amount of revenue every month from customers because they're not charging it all up front, right?
Right.
So they end up having this long period of time where they're spending all this money, they're getting all these customers, but they don't they need to get funding in order to be able to properly run and grow and everything. So at the early stages, even when you have a startup that's only like 4 to 5 people, they're going to have to start getting big amounts of investment in order to be able to grow. So that's when they have to start figuring out their forecasting and creating a financial model that they can show to investors. So the actual starting size is pretty small for the kind of clients that I would help out. And then eventually these companies would get big enough where they wouldn't need, well, they'd want their own in-house staff to be able to do that kind of stuff. So usually it would be somewhere between 5 and 100 employees, I would say.
Oh, wow. So you're a temporary fix, if you will, for accounting. People getting up and running, getting started. They're below 100 employees. They've been in operation for, 10, 15 years kind of a thing. But beyond that, they tend to bring accountants in-house. That's what I'm hearing.
Yeah, usually like it can be helpful to have an outside perspective sometimes, to be able to, especially if it's a skill that your CFO doesn't have already. So sometimes it's useful, but for the most part, it's these companies that show a lot of potential. They've gotten some funding, but they want to grow really quickly and they need to get a whole lot more money in. So they need someone outside to be able to help them do it quickly, where they can't hire themselves quick enough. They don't understand it themselves. They need some coaching and training. So there are a lot more consulting kind of businesses that fulfill that need for these companies now.
Okay. So then, personally, in 5 years' time, how do you measure your success? Will your success be in the number of clients that you have, the assets under administration, or what?
Well, I'd say the most important thing for me is I want to be able to make this self-sufficient business. And I think that's a good goal for a lot of people. So eventually in 5 years, I'll want to have all of my staff be able to properly train and run the business and market it without my help. So the business will run properly without me. And that way, that it can continue on in the future and it can continue keeping to provide a great service ongoing. So I don't think there's any specific number I'm looking towards, but I just want to make sure that all the processes and people are in place so that I can just continue on indefinitely, essentially.
Yeah. And as I said, you moved physically from Ottawa to Victoria. Do you see this as a life-changing plan? You move west, you gain new clients, you build up your business and retire out west. Do you plan that far ahead as an accountant?
Oh man, I don't think I planned that far ahead. I think what people want changes so much from year to year. So I can't imagine I know what I want 10 years from now. But when you do make a big move, it does feel like a big change, big life change. It feels like an opportunity to embrace some new things and try and learn and grow. So I think it does feel like a little bit of a refresh, and most people can probably relate to that.
So yeah, totally unrelated to what we've been discussing on the accounting. How did the move go in COVID? Like, you had a lot of challenges. You must have, just finding moving companies and all the other stuff.
Well, so the nice thing was the place that we had previously, it was partially furnished. So we essentially sold all the furniture we had, and we shipped everything through Canada Post. And
Through
that
Canada
sounds
Post.
through Canada Post, and it sounds ridiculous, but it's actually so easy. You just put everything in a box, you bring it down to the post office whenever you want to, and then eventually it makes its way over. So it was probably the cheapest option. Obviously, I had to do a little Excel to figure this out, but it was the cheapest option, but also it was super easy.
Wow. And then
Yeah,
presumably you bought new furniture or whatever else you needed in the house out there.
exactly. Yeah. So it's a lot of work once you get to a place, but not having to drive a whole week across the country is pretty huge, I'd say.
I would agree. Harrison, we wish you much success in this endeavor.
For sure. Thanks for having me on. It was great.
Okay. Harrison White,
Okay.
president of Virtual Accountant.